It means that if you hold your cryptos, if you just go and buy crypto on NBX, K33, FIRI, whatnot, or Coinbase or Kraken or any foreign, then there's no tax implication per se in terms of that you buy it. You go in with Norwegian crowns to euros or directly over from Norwegian crowns and get the crypto. You sit still with it, you do nothing else, then there's no tax implication there and then. However, if you sit still and have it over the new year, i.e. the tax year of the 31st of December, or actually they were the first authorities in the world to showcase a heat map of all of Norway, where at that time I talked to Torstein Tinn, who was then the head of the Crypto Task Force Group, and I said, use a bold state line. And so what do you mean? Use the heading, we know where you live, ... And that's what they actually put into their official slide. We know where you live, ...
Yeah.
And just a heat map of Norway of the areas where people live where they have crypto. I see chronologically what you've done. Oh, you received this one. You set this airdrop to 0, but you still have the token, don't you? Yeah, but the token doesn't have 0 value. It has some kind of value. We need to report it. Oh, I wasn't aware because someone sent it to me. I thought it was for free. Do I need to report free things? I just got a giveaway at a conference. Why do I have to pay taxes on this one? Because it's another different type of asset class. It's not referable. And that's what people try to...
Hi, Magnus. It's nice to hear you today. You are an expert in the emerging technologies.
Thank you.
Can you introduce yourself and tell, because you have a lot of fields that you can talk about.
I used to be the Nordic blockchain and innovation lead at EY, Ernst & Young, for close to 10 years before I started a consultancy by myself last year. I have a background from actually technology, economics, and I can decide. So I also have a master's in European law from the UK. Been dealing with everything in from, call it the classic TradFi part of just working as within ordinary real estate area for many years when I started out at EY, but then also working a lot within the cross-sector of getting law into ERP systems, etc., talking the same language. Not many lawyers or legal sphere talk the same language. So I've been all of my career trying to, do innovation at different levels and merge different types of industries and technologies together. So emerging technologies describes me very well in some other years, and trying to always lay a couple of years ahead of the curve also.
Why Web3? What was the turning point that made you realize this is your field?
I wouldn't say, Web3 doesn't come in itself. And Web3 is also an expression that if I ask you to describe it, or if I ask another person to describe it, or a third person to describe it, we will get 3 different answers. Web3 doesn't have a clear definition. Web3 is something that you can say always, oh, this is the next generation iteration of the internet, whatever. How, in general, we combine something more that is, call it user-centric. We own our own data, and we enhance different types of new technologies into it, so we don't have a centralized owner towards either the services or the products in itself. That's, call it the nutshell. But if you add all the add-ons towards what is included in Web3 or not, that's a very hard definition to put into. So I would say I'm this old, actually, that we need to rewind a little bit before Web3 came up as an expression. That's when I started to go into, call it the more of the digital asset, crypto asset sphere. So as I briefly mentioned, I started out at EY as an ordinary real estate lawyer. When I started out there, it was some new rules coming up for VAT area. Pretty boring, but still complicated rules in sort of how you erect the building, how you can deduct the VAT relating to it, all depending, do you have a VAT liable tenant or not? And in brief, at that time, the state-of-the-art tool to handle this one was Excel. So when I started out, they were looking for someone who had competence within real estate. I had that back from a family business within the real estate. My father is an architect also. I knew economics. I had a legal background, And I could also do macros and coding and scripts in Excel. So that's what I actually did my first, I would say, 1.5 years at EY, working as, I call it a traditional lawyer within the sphere of real estate, but also developing this tool, testing, developing, and building it. And then it moved over to, as I briefly said, understanding how to apply, call it the law from the tech perspective, and talking the same language as our IT consultants at EY, because I was at the law firm. And there I started to work a lot within the digital tax authorities scheme, i.e. how governments collects data. And at that time, back in 2012, 13, it wasn't even on the agenda for auditors or accountants within our side to, think in data terms.
So they had only everything most of the time in the Excel.
Yeah, Excel and manual data handling. We was like everyone else sitting,
with the
handling manual vouchers. You receive a control from the tax authorities. You go in and handle the vouchers manually. That's how it was dealt with at that time. So I saw a new element coming up from being hands-on on not only working with, tax authorities, director of taxes, all of these parties to get the information directly there, but also from being active outside of my work on the Norwegian Computer Association, where I was part of the group for robotics and artificial intelligence, back at that time. I also co-started the group for blockchain there. And you pick up all these, call it the trends and the big data hype that we had coming up to 2014 and 15 and surrounding that part.
And now coming again, that robotics and AI is coming again to the
exactly
2025.
So the long story short is rather I identified some areas where I saw governments will request more and more data. They will do it more electronically. We got something called the SAFT, Standard Audit File Tax, coming up. So I identified that area and said, hey, this is something that we need to take serious. We need to, build the data infrastructure. And that was a thing that is naturally expensive for EY Norway only to build and spend money on. So we managed to get it into the global organization of EY. So I was working on this project for close to a year, where we built a tool surrounding this part to be able to handle, call it the input data on behalf of our clients. And this was, call it, way ahead of the curve compared to any of our competitors or anyone else who had done this one. And I sort of managed to not have, call it, a crystal ball, but at least I managed to identify the trends by connecting the different dots from the different type of industry, not only thinking pure, law, legal, what's going on, but identifying it towards what's new EU requirements coming up, what's new global requirements coming up, etc. So the long story short is there that I at the same time had followed Bitcoin specifically at that time for some years, trying to get the hold surrounding it, but it's a complex area also from, call it, the legal sphere. So it was after this one, and I was pretty busy, on developing just this SAFT tool. But it was at that time I said, we were coming to 2015, and Bitcoin had evolved quite a lot since the early days of 3rd January 2009. And that's when I said, I think now something is happening that we need to, understand it from the legal sphere. We really need to understand it from that kind of angle also.
So you already start to think about it in 2013, how to make it more regulative.
Yeah, in 2013, I just followed it on a private matter, but in 2015 was when I went to management at the law firm also and said, this is time we need to understand this from the legal perspective and tax perspective, not to forget. And then they were like, most of these partners, they were like, what do you mean, Magnus? Isn't this for our IT consultants? And by the way, isn't it only criminals and crooks and bandits who use this one? Should we really touch this one? Isn't this dangerous and, puts us into a risk position? I said, well, it's the quite opposite. We need to understand it. But if we are to look into this one, we need to also understand it from the tech perspective. And I think that's how we managed to succeed on building this group at EY, where I was lucky to team up with one partner called Gjert Melsom, who really is a front runner in the area of everything. of understanding. He wrote his thesis before anyone had thought about the internet, many decades ago, about how to handle this one. The world is moving forward. So it's all about seeing that perspective. So that's what led me into it, the combination of being curious to see how you can combine different industries, combine different elements and call it efficiencies, but also driving innovation in an area where you will not necessarily succeed overnight, but at least try to call it move the world forward a little step at the head at the time. But maybe sometimes you even need to take 3 steps back. That's sort of the part of the innovation. So I would say it's my curiosity towards not only having like my background of just going in of having economics or just law or technology, but the combination of it that has led me through it. So that's how I started the whole thing. And hadn't it been for Gjert, who was willing to go in there and take this risk together with me, it would never have happened. So that's call it the long story short in terms of how it led me into it. And then we saw that this area was growing. Not necessarily fast, it all depends, but you saw that it was a growing.
The last 10 years.
But already in 2015 and 16, then we saw the growth coming up, building up to the first real bull market for the average Joe, sort of saying, in 2017, when Bitcoin was getting close to $20,000. That's sort of saying the first real hype cycle of the whole thing.
Yeah, there was a stories about people start to sell their properties just to buy the Bitcoin.
Exactly. So that's when we saw we generated more volumes on this one. Governments needed advice, clients needed advice. We assisted the first ICO, the first Norwegian ICO, also in this kind of matter. And it was not like we greenlight them in any kind of way, but we helped them on the bread, milk, butter side, setting up an efficient tax structure, a company structure, nothing to do with crypto, but just for the benefits of the investors, for the owners, for everyone included in the project. But then also made it possible because we had invested in the team to say, as lawyers, you always think, I need to read the law. I'm good at reading. That's how I've been educated. Is it something I can do? It's just read. But we took it from a different perspective and said, hey, if we are to deal with this one, we need to have our fingers dirty. We need to understand the tech, not only read about the tech. So that's what's differentiated us, and why a great colleague of mine, ex-colleague of mine, Mats Ribe, who is now left EY also. Illustratively, he's going in now in the compliance department of OKX, the crypto exchange there. But him and me were the first one who brought the case in for the financial authorities in Norway when it comes to crypto. The reason why I left a year before Mads was I think he sees the same thing as me now, and that's the heat of the market. And it's not about the price of the Bitcoin per se. It's not about, what you read about in the media or see in the media in general. That's just the greatest heroes or greatest fools. Like we can say 2 weeks ago, it was like, oh my God, I should have bought into Bitcoin, it's mooning again and it's over 100,000 and whatnot. And today when we sit here, it's getting less and less and less, and we're touching even 70,000 something, and people are saying, what's happening now?
Yeah, today is going just down.
Exactly.
For the today's date. We don't know when we publish the interview, but anyway, today is just going down. Let's hope.
Exactly.
Yeah, you never know.
So my point is rather, I didn't leave because of that in itself. I left because of all the things that is happening on the back end side of TradFi, of banks, of financial institutions, of corporates to whatnot. And this is left in the setting of everything that surrounds the landscape needs something that has currently been missing, and that's trust in general. Otherwise, this market would have been flying years ago, There's no other reason. But in general, for the average Joe, if we go out on the street today and ask someone, still they've heard about Bitcoin, but they don't fully trust it. The ecosystem is way too complex. What's changing this one is that we get more regulation in place. That's what can bring trust, not in the way that it brings trust directly to the consumers, but the more important stuff, the banks, the TradFi, the financial institutions, the corporates, all of them they need this one in place in their backend side in order for their head of compliance, their head of legal to sign off and say we can do something more than just doing the R&D projects that we have seen. Adidas, Nike, Gucci, Louis Vuitton, Prada, Budweiser, Coca-Cola, Samsung. I could spend the rest of the day naming all top brands in the world who has dealt with it. But what people are forgetting there is that they have just dealt with it from the R&D perspective. You cannot mention any of these cases to me who has more than 5 to maximum 10,000, call it, core users connected to their project. So that's R&D compared to the global number of clients. So in this perspective, I'm more talking about how do we streamline the whole of the industry. Then we're getting closer to what you said about Web3. So I would say I rather started out in, call it, core crypto to do all the boring stuff of handling tax, legal, ensuring that you can be compliant, understanding the attributes of a token, understanding how to interpret that one, and then moving it forward like we are seeing now. So the reason I left was rather that I see there's so much need on the backend side still to have full legal clarity, because even though we have...
Like there was a problem and you decided to solve that problem, and you saw that your entity or your person, you can solve this problem.
Yep.
In short.
Yeah, and I saw that it was not about that I myself could solve it per se.
I mean, you be the idea with the team of yours.
Exactly, and that's the strength of that we had at EY, you know, because we had people all over the globe, regardless of where you were. We had someone who could help in one way or the other, and also the complexity when we talk about this one, and that's also, call it, to summarize the pictures that I'm seeing that is needed, is that you can always hire in, call it, a 20x-year-old advisor who has X amount of followers on X, and apparently say, hey, I have the community, let's build, let's do an NFT drop, and we'll do an NFT drop for 8,808, and we know we have a community at least of 10 to 15,000 who wants to go in, easy supply demand, it will be sold out overnight and look successful. However, these kind of persons, they have no clue about the corporate structures, the legal structures, what you need to have in place. How does a supply chain function? How do you handle your import VTs? How do you handle your import duties? All of the bread, milk, butter. How does your ERP system function? So all of these parties needs to be put into place. So that's where I see there's a lack in the market right now of people who really understands how to interpret MiCA in the EU, the Markets and Crypto Asset Regulation that is putting, call it, the whole of the industry going forward. But it's also a need in order to understand still the tax legal part of it, how to actually handle it from the regulatory sphere, because MiCA, yeah, it draws up some lines, guidelines, but it's not complete, not at all. You can not lean on MiCA in itself. And then you also need to understand what all the degens, I would say, are missing out on. And it's not like I'm trying to say I'm on a big white horse and knows everything, but I know it from the traditional industry, from working with them, from knowing where their pain points are.
Going back, what is MiCA and what are the goals and benefits of MiCA? Just to go back, if our audience it's actually a bit new word or abbreviation that is...
MiCA is a word, if you are into crypto, Web3, or call it whatever you would like to, that you will really hear something about in the years to come now, because that's everything is about MiCA. And in brief, as I said, it stands for Markets and Crypto Asset Regulation, coming up from the EU. Lots of people think we have MiCA in place because of that Facebook, or Meta as they call now, they try to introduce their own coin, the Libra or the DM that they changed the name to. Stable coin that was going to be pegged and backed towards US dollars, towards yen, towards British pounds, towards everything that was around it. Could be stocks and shares behind it. It can be bonds also. A good bundle of something that was safe.
Yeah, we're gonna talk about the stable coins a bit ahead. But
but in brief, there, lots of people think, oh, the EU understand that one. If such a large private party is introducing their own type of stable coins, and they also own the infrastructure of sending money back and forth, shit, we're in trouble, because someone will have access to all the data. Not only will they have also access to liquidity, because they have, billions of users in the world today, but they will take over, call it the whole, they put the monetary function of the financial system into jeopardy here. So that's why lots of people said we need regulation in place. We need to ensure these guys are not coming. However, the real reason for why we have MiCA is actually the 2017 market of the hype that we talked about, where you could issue ICO, the initial coin offering. You spent literally 30 minutes on YouTube watching a video, and then you went out and spent another 30 minutes to mint the tokens, and suddenly you issued a white paper that could be 4 pages, and you raised millions of dollars, and then in the next half an hour, you could say, bye-bye, guys, I'm on the beach in Bahamas, good luck. That's in the nutshell what happened. And of course, it was not only frauds, but it was a huge proportion of it. So the first version of MiCA was drafted out actually in August 2018 when someone tried to put into place a regulation for crowdfunding and ICO specifically. And if they had put this one in place, it would have been outdated even before it came into place because IEOs, the initial exchange offerings, came up. So it's been built out of this one to protect. It has sort of the mantra to protect, call it stupid consumers who just want a quick win. You should also protect naturally professional investors, so protect consumers and investors, but also ensure financial stability in your local markets to ensure that, the euros or Norwegian crown doesn't fall apart. And then it's also the third one, which might be ironically to drive innovation. That's the 3 mantras of it. So it's to, in brief, what they have tried to do is put all classic financial rules into the crypto sphere and hoping for the best there. And naturally, MiCA has been a process of political negotiations. So MiCA is not perfect in any kind of way, but it's a step in the direction towards it. So I would say MiCA brings, to a certain degree, more definitely trust in it, because all, now everyone back in at the banks, at the financial institutions, the corporates, they say, finally, we have a regulation. I can lean on this one. This gives me certainty. We can move forward. So this is the area that I want to help people on also. But I also know it's not fully complete. So MiCA there, it will cost a hell of a lot of money to say it straight out. It's rule of thumb, it costs you minimum 200,000 euros to deal with it annually. And if you're a startup, do you have 200,000 euros just to spend on this one? No. And if you also are a startup and you don't have a head of legal or a head of compliance or whatever person that can handle this one, you need to deal with it in the way that you spend, and I said benchmark is, because I'm dealing with lots of startups, 70% of your time on compliance, 30% on building. And there's no startup that can succeed by, spending 70% on just formal
legislation.
Work.
Yeah, that's
so that's why I'm saying MiCA, it kills innovation for the startup perspective and the ones who actually cannot afford it when building up. So that's why I'm assisting lots of players now moving out of the EU, not because they want to do tax evasion or fleet away or whatever, but they just cannot be here because they cannot build.
It's too expensive, yeah,
exactly.
for the startup. And what about the when will MiCA actually take effect in Norway, and what key changes will it bring for crypto companies?
MiCA is currently not implemented in Norway, or to rewind just a step. MiCA came fully into place on the 30th of December last year. And parts of it also for the stablecoin part, we have something called ART and EMTs, asset reference tokens and e-money tokens, that came already in place on the 13th of June in summer last year. However, in Norway, since we're not a member of the EU, it will not come in place before the EEA has agreed to it. And Norway spent a lot of time on submitting their formal answer towards it. So Norway didn't submit that one before the 17th of December last year. So right now, it's being treated by the so-called EEA committee. It needs to be sent up to something in the council, etc., formalities. What I heard from the rumors is that the EEA formalities has been agreed upon. It's not formally out there, but what I heard rumors from safe sources within financial authorities among others, the EU part, is that it was signed off last week. So we can get it into place in Norway if it's being lifted up in the parliament and in the formal processes actually next week in Norway also. So maybe even, not sure how long time you need to edit this one, but maybe when this is out, we even have it in place in Norway if everything goes according to plan. However, if they need to do formality processes, it can take some month also. So we were just very happy now that it went through, or knock on wood, if rumors is true, that it went through on the first round. Otherwise, we would have had to wait a couple of other months and a couple of other months additional, and then we would be after summer. So I think at least I can, pretty sure say MiCA will be in place now. It looks like at least before the summer in Norway.
Will it become harder for Web3 businesses to operate in Norway after MiCA, or will the regulation actually help the industry?
It will be hard, or
it'll be much more expensive for the startups as well to open the startup. Yeah, actually.
Yeah, that's one thing. So again, from the innovation side, it really kills innovation. However, you can always seek for grants or something, but still, it's formalities, and you can always argue, because it's not like I'm trying to argue for an anarchistic point of view and saying we don't need regulations or rules to follow. I would rather say on the opposite side that the majority of the parties who is in Norway or the Nordics or whatever. I work with clients all over the world, so it's not only about this. But if you take the example of Norway, I would say all of the parties who is the big serious actors in Norway within the sphere, they're already ready for it. It's not like it came overnight and it's like, shit, we need to do something. Of course, they're registered with the financial authorities. They follow the Anti-Money and Laundering Act. They follow ordinary, the business rules that you need to stick with here. So it's rather from the operational point of view, you have to prove your ESG CO2 footprint, stuff like this. Now you have to spend money from some third party who provide you, to say it straight out, bullshit data, because it's a requirement to prove it, but it's not put any threshold towards what happens if you have this print or that print or that print. That's why I refer to it just a bullshit requirement from the EU. However, we need to cope with it. We need to deal with it. It costs money. We need to see it. It can be a good perspective towards it over time, but right now it's not. And then you also have other requirements that comes up from the traditional financial world. That might be good, might be bad, but it's down to also, you need to prove that you have a board and a management that is competent, because that's something. If you run a bank, financial institution, you need to prove that they are competent. Do they have a master's degree? Do they have a PhD? Do they have sufficient background?
But there is nothing with the crypto and the Web3 maybe.
Of course, you have some few, there's I would say more and more institutions like the Wharton University in the US. You have the Frankfurt School who has master's degrees. You have a couple of others. They're coming, but it's not already now people who has these, paper background. But I could come in and, pretty easily verified who is competent or not on this area.
As well, to find the people like you that they can evaluate the other people to take on the job. So it's
So the irony here is a little that, like I argued with the financial authorities many years ago, when I remember I mentioned Mats and I was there for the first time. It's down to, we have a financial authority and they're supposed to be the organ that is drawing the line towards saying, are you competent or not? And actually that works easily within the banking world. But like I told them, you are to draw a line to say someone is competent within crypto. And then I would like to rephrase the question to you, sir. Are you competent, and do you have a competent team to, make that verdict? Because do you have a master's degree in blockchain? And that gives the answers given. So I would say on the long-term perspective, MiCA carries a lot of good stuff with it, naturally. It brings clarity in general. It brings trust and everything. However, I would say there's still way too much, call it uncertainty and confusion related to it. It's not like we have a clear benchmark of we need to follow all of these steps. It needs to be created a little while walking. The road is being created while walking.
It's still innovation that it goes on its way.
Exactly. But we have to deal with it in one way or the other. So MiCA has come to stay. It will bring lots of good. But still, for startups, it's a nightmare. So that's also where we need to, look into how we are going to deal with it. I would say we need to put more definitely government grants into this one if we want to have these parties staying here in Norway. We have, call it the three unicorns that we have in Norway of Nansen, Dune, or Dune Analytics as they previously was known, and Axie Infinity that is co-founded from Norway. And all of them, they're out of Norway. And if you just look into...
And which country do they prefer to be based?
Oh, that's just very... call it. It's. I understand your question. There's no such thing as I receive this question very often, and there's no such thing as the crypto jurisdiction or the preferred jurisdiction. It's the classic legal answer. It depends, and it depends based upon. Take the example of Nansen, the founder there, Alex Svanevik, who actually worked a period at EY also. Not many people knows this, and his father is the legal counsel of EY. He was already in Barcelona, moved to Hong Kong, then moved the company to Singapore. Then the Dune guys, they were in Norway, but both because of tax reasons, fled to Switzerland. And Alexander, he has always had parts of his company in Axie, in Vietnam, and the other corporate structures surrounding that sphere. So there's no one place preferred, but I would say you need to look into where, if you have your own holding companies, where are your investors from, and also where do your developers are, where is your IP, if you have any IP developed, all of this as a core bread milk tax legal package that you need to look into. And then you can also then have to find, are you addressing the EU market? Do you need a MiCA license or not? That's a thing. Maybe you need another subsidiary, then you need to take a corporate structure, then you need to think both ways. Like, say, Coinbase, they came in, US-based company, one of the largest crypto exchanges in the world, they registered in Ireland because of tax reasons also, not only because the authority talks the same MiCA language. So you need to think strategically, also all depending on your products, the attribute of the tokens, what are you delivering, because in some jurisdictions it can be easier than others to get it through. So it's a puzzle that needs to be seen as a total thing, and not only that I can say go to Switzerland like you did in the old days, or go to Malta, or go to Estonia like many people thinks, or like now go to Dubai. You know, it's pros and cons and everything, and that's what we need to take into consideration as a whole and the totality. And this is what we have been given advice for many years on in EY as the whole package, and also part of the reason for why, you know, I see now a need in the hands-on experience, and that's why I'm teaming up with a couple of other guys now, pure DGens who knows this part of the industry, while me and a couple others will bring the clarity on call it the corporate structure and mix and bundle them together, because that's what you need now in order to be able to scale a project.
We have already seen announcements about transition periods for businesses in the European Economic Area. Do you think this transition is just a good way for businesses to get the license and build more trust and credibility with their clients?
I think if you refer now to the MiCA transition periods, then we will see a lot of different variation on these ones. We know the transition grandfathering period, they varies a lot. And I would say they're not good at all, because it would be much better if we had a fixed benchmark from the EU on this one. And this also relates to that, I would say a challenge is that, as I briefly mentioned, MiCA is a political document, you know? It's like all other politics. It's not like this is the crypto regulation that someone has all the benefits of crypto. It's pro cons towards whatever you deal with in politics. So it means that the EU, they have said, well, we have something called fully decentralized. So if you deliver a service, unless it's fully decentralized, then it's covered by MiCA, etc. But what does fully decentralized actually mean? Also, a large collection of NFT. What is a large NFT collection? And you know, the EU in itself, they could not answer that question. And they found out that, you know, it was not easy to answer that question either. So what do? Well, they say, oh, Who is going to monitor this one? It's the financial authorities or the competent relevant authorities that they call it. And I can just mention, I recently when I was in Davos at the World Economic Forum, I hosted several panels there. And among others, I also had financial authorities together with me there on the panels. And there, they said straight out, the ones who actually know something, they said, well, in general, the closest thing we can say about our colleagues in other financial authorities is that they're incompetent relevant authority because they know nothing about crypto. And
how do they think to solve this problem?
No, so the thing is, the EU just then says, well, if you wonder what does fully decentralized mean, you have to then just ask your local competent authority. And that means you will get one interpretation in Norway, one in Belgium, one in Spain.
And one in Norway like you.
Exactly. So this is why I would rather prefer that we had one fixed benchmark on the timeline towards also the grandfathering period, etc. Because there's so many, call it intermediaries, cross-links here, where, for example, right now, if you are a Norwegian crypto asset provider in some kind of way, registered as a VASP, a virtual asset service provider, as it's called now, while MiCA call it a CASP, then you're actually not allowed to be on stage even and promo your products in an event in Spain, for example. And you have to then understand the grandfathering period of what type of license you already have in place, how long it reaches out, and how it affects. That's just, it's made for, create confusion. So I'm no fan of that part, no.
Let's go to another topic about the startups that we was talking about a bit previously. How suitable is Norway for launching a Web3 startups compared to other jurisdictions?
Again, it depends. It depends. Are you planning to build a product that creates a IP value in itself? You create IT software in some kind of way, or do you just run call it a consultancy or whatever? If you create IP, i.e. you try to build a product that have a global market reach in general, and this grows, take Dune or Nansen as two examples. They're pure analytic company. Nothing to do with crypto per se. They don't have their own shitcoin or tokens,
like consultancy,
or whatever.
We can say, yeah, as well. Can we say them consultants?
No, I wouldn't say they have some research, but their main product is that they have a software solution, so you can ask. It's pure SQL queries. So they screen all data from different blockchains, have it in their system, sort of thing, because it's public data, and then you can make queries. So if you wonder how many people are using DeFi, how many people have bought this shitcoin, how many has bought this token, how many owners do you have this one, what's the adoption rate, whatever, then they have this one as the information platform. So they have not provided any crypto token products, whatever, in some matter. They're just an IT company. So when they build up, as said, there's a reason for why Dune left Norway. Fredrik Haga, one of the co-founders there, he has some great both podcasts and interviews and whatnot in many different channels out there. I really urge you to listen into him if you are a startup here in Norway, in terms of the risk and the challenges that he has experienced hands-on from a very hard way, in terms of that you build up something of a value in Norway. And then that's just call it, it's a value that is not real in the way that you cannot cash out on it, and you have stocks and shares in your company, but you cannot sell these stocks and shares to the open market. Also because of restriction of other shareholders. So you see, you raise money and the IP, the IT services are valued at a higher level and then a little higher level. But these are not values that you can cash in on directly, but you're taxed by it. And if you also want to move these values out of Norway because you see you cannot manage to pay the wealth tax relating to it, then Norway charges you tax for moving that IP out of Norway also. So then it all depends which country do you move to. do this country have a tax agreement with Norway? So it can be very good or very bad in some matter if you put it a little on the edge. So I would say if you're a startup in Norway, you should consider, are you just doing, call it an ICO typically thing? Who are you working with? Where do you build your IP? Does it lay in Norway or not? If it lays in Norway, you should think really cautious surrounding that structure. And that's also what I clearly saw from my time at EY, that most people start in the opposite way. You start down in the basement, you're excited, you start building, you just start doing, you raise the money, and then you start thinking about the tax, legal implications. You should rather do the opposite way. The first thing you should do is say, hey, where should I establish my company? I want to do these three things, sort of saying as the main thing for the company in general. We, of course, don't know exactly the road, but it might take this way or this way. Where is the best place? If you have dealt with it in this kind of way, try to ask Fredrik. I'm pretty sure he would say, I would never establish this in Norway. Never, ever. I will go straight out, move instantly, and rather start up another place.
And we are talking about the Web3 startup right now.
Yeah. Now we are talking startups in general. It could be a tech company that has nothing to do with
So it means
crypto.
the tech company, to start a tech company here in Norway, it's a whole disaster, or...
Unless you're wealthy enough to be able to also pay, call it your wealth tax from that perspective. So that's a single debate that has nothing to do with crypto or Web3.
What about the government? You've been talking to the governments. What are they thinking about this? How they can promote the entrepreneur environment here in Norway?
It's politicians that has zero experience from themselves. Normally they have zero experience from working life. They have zero experience from running a startup themselves, and thereby it's just a matter of sake that it's not the majority of companies in Norway who is doing a startup, and thereby you do and think, like I said, it's politics. You try to reach the masses so you can be re-elected. You don't actually care shit about it in practice, to say it straight out. That's how politicians deal with it. You pick your fights, you pick where you can reach the masses, and whether or not it's on the software startup side or if it's on the crypto side. That's not, call it, the main parts that has driven innovation in Norway from a historical point of view. But if you ask all the tech startups here, I think you will receive the answer that this is a challenge for Norway in general. And what we see in practice there is, like I mentioned, I'm dealing with several startups. Some of them are in the decentralized exchange sphere. Others are within DeFi in general. They move out. And again, not because they do not like Norway. They love Norway, would rather love to stay here. But in the building period, it's just impossible to deal with it. So Norway, and it's not only Norway, there's several other jurisdictions. They're just not good for running startups. So that's why we see in general, if you see on call it the world's largest, most successful companies, they're more US-centric than EU-centric, if you take that one into a perspective.
So the question is it difficult to raise the money for the startup with the Web3? Will be difficult, or in
Norway, do you mean?
In Norway, yeah. For example, if the tech company or any startup with a Web3 technology or something with
I would say you never see any project that is pure Norwegian or pure Swedish or pure Spanish or
but
whatever.
In Norway, I would say.
So
if
you normally the case is you have one or two persons that might sit in Norway, then you have a friend of you or someone else on the team that
I would say legacy establish the company here in Norway, because when you get to the tenders or something, they want you to be the Norwegian company. You can be outsourced by the other, but the main office or head office should be located in order to get the grant or to raise the money for the...
Exactly. And then it's down to the question right now, since we know that MiCA will be applicable in Norway, you need to figure out, do you want to actively address the EU market? Because there's a clause sort of saying in the MiCA regulation that says you can do something called reverse solicitation. And it means that a US company, for example, is allowed to run their services and have EU clients and customers. However, they cannot advertise or directly approach them or be on a stage be on your podcast here would be illegal for them. Then you need the MiCA application in place. So then you need to figure out on your product, your service offerings, is this relating to EU specifically? If it is, then you have no other choice. Then you have to apply with MiCA. Then you have to have the funding for this one. Or you have to say, let's go to Vietnam because our developers are there, or go to Singapore, or go to the UAE. It's like a friend of mine. He wanted to do RWA, real world assets. He wanted to tokenize the real estate industry. I said, why the heck do you want to do this when in Norway? Yeah, because we have a great real estate market. Yeah, maybe exactly where we sit and record this podcast, we have a good real estate market in Oslo in general. But is it really that many people here who both understand real estate and tokens? And he was like, yeah, no, maybe not. No, there's zero. I can tell you because I've been dealing with all of these projects. I've been trying to tokenize involved in projects, tokenizing hotel rooms and private buildings and private homes and shared homes and
You've been
offices.
trying to do that here in Norway, tokenizing that real estate as well.
Yeah. Several projects has tried this one. All of them have failed only because of the tax and legal reasons. And they started in the wrong direction and didn't want to listen in. That's mainly. But also because, like I told him, if you look into this part, there's zero liquidity in this market for tokenized assets in Norway. Per se, if you go out on the street, would you rather like to buy a ownership share in a building and have a stock and a share, or do you like to own a token? And everyone would say, I would like this. Even the investors, they say, Magnus, this property, this building is great. You have 200 million here for it, but keep this token shit out because I don't understand anything about it. My investors doesn't understand anything about it. And my lawyers and the legal team for sure don't understand it. And my accountants doesn't understand it. And my auditors don't understand it. Keep that out. Here's the million if we can just skip that token part. That's the answer. So I told this guy, you want to do this one? You also need to have the legal clarity surrounding it. You have this one currently here now. And it's like, no, not fully. Exactly. You want to fight the system here, or do you want to just go down to Dubai, where you have a whole bloody city who is built up on real estate? The whole city is built up on the real estate market purely. You have lots of international people in there who also, not everyone, but a huge percentage that understands token and the token economy. And you can go to the local authority called VARA, the Virtual Asset Regulatory Authority, which is both the financial authorities, the tax authorities, they call it the criminal police, and the governments all in one organ. So if you get the license from VARA, you have all the approvals you need. You have no uncertainty, no doubt. You go straight in, you have to pay for the license. It costs you around $200,000 there also, so it's not free.
Oh.
But still, then you have the whole clarity package and you have access to a market which also has liquidity. But then you cannot say like all startup projects that normally is out there. And they are saying, no, Magnus, we're not Norwegian or this or that. We're just, decentralized and we have the whole world as a market. And I said, yeah, that's fine in theory, but it doesn't work in practice. So then he requires a KYC, I know your customer, so you have to identify yourself as a citizen residentship within the UAE. So then VARA is happy because they know we don't get random people in there from whatever, sanctioned jurisdictions or whatever. We know it, who they are. And you screen it within these four corners. Build it from that side. If you succeed there, move your projects then to Singapore maybe next, or Japan or whatever. Just mentioning some random, not in this order or whatever. But then you actually have to understand, stay the F away from EU if you do not want to come into this compliance nightmare. But if you see this one works there, of course you can move it, isn't it? But then you also understand what is the cost. So you need to have the cost benefit. And I think that describes very well why Tether, for example, you mentioned stablecoins, why Tether, which is de facto the one who has the larger volume of stablecoins in the world today, they are not in the EU. They say, F off, we're not interested. We're not going to be compliant with MiCA here directly. Of course, they understand there's a market and something there. That's why they bought into a smaller stablecoin provider from Malta who has the license. So indirectly, they can access the market by easily just wrapping their own Tether into something else, and they have the client base. But this illustrates how the EU is killing innovation on this area. And I'm not saying that stablecoin will take over the world tomorrow. But I'm saying, again, to why I left the UI, because there's so much going on the back-end side. So I recently came out of Davos, and now also the Stockholm Fintech Week, And also we had a separate session on the banking backend system side this week in Stockholm. And all these banks, they are preparing themselves. We already seen here in Norway that, DNB has gone out and said, we want to be able to do, custodian services. They publicly said. They said, we are considering doing a crypto fund, even a ETF thing there.
So did they open already a new department? Because I heard about the DNB, they just cutting down all the
I also heard it's not only heard, it's publicly out there cutting down, but I don't have any inside information or so matter that I can share that they're building up something. Of course, it's public information. They have hired in people like Nikolai Gobel, who was previously the CEO of the crypto exchange Kadpang, etc. So it's natural to draw the lines that they're preparing for something. So my point is, these figures that are or triggers that are already out there, we can put into a connected system. And my point is rather that when we look into and see it in the point of view that a player like SAP, the ERP system provider, they have just recently opened up for the option and possibility to pay with stablecoins when you pay your ordinary invoices. It's already in your ERP systems. You remember I talked about how I started out with putting the law into ERP systems? Now this is the link where IC comes in and where people have not picked up on it. In Davos, you have, in my audience, it was mainly it's C-level people. It was one person in the room who was aware of this solution. So it means you run SAP, you can call them up within half an hour, you get access to the model. No changes or updates in some matter in the ERP system. It works, it's in there, boom. Then you issue an invoice. The backend people, they issue it, invoice with VAT and everything you need, and then you just choose another step, pay by stablecoin. So you top up with your stablecoin, you transfer it, and immediately in the accounting system, the invoice is settled and cleared from A to B within seconds. And then you can also negotiate your prices, because if you pay something on day 1 instead of day 90, you should have some benefits. But on the other side, the paying company, they will receive also, the purchasing will receive the customs documents, the freight documents, the pro forma invoices that they need in order to deduct the import VAT. That's also a liquidity matter. So you can make efficiency for both parties here. You get a better price and you also get deduction for liquidity faster. And when this is happening, this is not going to happen overnight, if you understand what I mean, that you pay Norwegian to Norwegian company. It doesn't make sense of taking your Norwegian crowns, going out, buying euros, or exchanging euros to buy ETH for that matter's sake, to be able to get a USDC or a Tether or whatever. That doesn't make sense. But if you think cross-border transaction, this actually makes sense. That's where you saw the first use case that SAP revealed in just before Christmas last year. PayPal paid an invoice to EY using the SAP ERP system, using their own stablecoin PayUSD, and then the settlement was cleared by Coinbase. So EY then received, call it the crypto stablecoin, but that was sent directly to Coinbase. So Coinbase changed it into US dollars, and EY received it as fiat payment into their account. However, if we think about this in the next scale, if EY had said, let's keep the stablecoin, use it for liquidity matters so we can pay another provider, so we don't need to have this exchange hassle all the time, then suddenly you have an ecosystem that flows. So this is just one of the examples of how I believe banking will be revolutionized on the back-end side in the quietness that none of the medias will see it, none of the consumers will see it, none of the general Joes or Jane out there will see it or feel it, because it's banking on the back-end side. And if I am to transfer 100 euros to you from Germany to Norway, we have no bloody clue how the bank deals with it. And this is in the same way. That's why I truly believe that stablecoins will have a huge, huge impact, a much larger impact on, call it, the ecosystem of finance in general that we can even imagine, but it will not be on the consumer level. So everything back-end handling, much more streamlined. When you also think about how these efficiencies is not only relating to business transactions per se, company to company, but also intercompany among a large conglomerate. Think about the case from EY. Internally there, they had offices all over the world. pay the internal invoices using a stablecoin. It's the killer use case.
Maybe they can just open their own stable coins, so too easy to send the money back and forth. Or maybe every company can open their own stable coin to use operate, because there are a lot of big companies who have chains all around the world.
I've been discussing this a lot lately, like I mentioned, from the whole of the last couple of months, actually on different, my own panels and others also. Roundtables, whatnot, closed working groups with banks and TradFis, etc. And that's the logic sense. Open your own stablecoin. But the challenge, call it in the perspective, is that you need to have liquidity for your stablecoin. So it can very well function if you have it closed in your own siloed ecosystem and you have corporates all over the world like EY or Deloitte or KPMG or PwC or whatever company you are, or a large banking group. Then it can make sense to have it as a own settlement method within the organization. Clearly, you can save lots of money, but if you are to try to get it out to a third party, then you need to ensure that it's actually liquidity to exchange it in if you send it to Bolivia, if you take an example. So that's why I personally believe that we will see lots of initiatives coming up. However, still you need to be there with someone who is able to have a reach, and that's why we see Tether is trying to take in that reach from, call it the or crypto community part of Stand. So they have liquidity right now all over the world. Their challenge is that right now, since they're saying we're not going in to get the MiCA license, some are saying they're illegal. They're not illegal. You are allowed to hold it, but you cannot necessarily, as a vendor, a crypto asset service provider in the EU, sell or trade or handle them, but you can store them, you can keep them, you can have it in the ecosystem, you can use them legally as a private person. But that confusion leads to why Circle, the second largest player, is moving into also the EU naturally and also globally. So I think that's what Circle has seen, that there's a need for something that is uniformed all over, and you also have liquidity and it's not politically connected. That's one of the challenges that I personally maybe see for Circle. They're US connected. So a certain president there, he is very happy with them because it's made in the USA. But other parts might not like that one. So you also need to think politics in this picture and lift it up to the level where Tether, when the talk was out before Christmas and they said, well, are you going to apply for a MiCA license or not? They did not fully say it right out, but they said it more or less directly that, you know what we are dealing with now? We're going down to Dubai. We're going down to make the DRAM Tether instead. That's where we believe the money is. Do you think someone in the EU system had FOMO there? Shit, what's happening there? This is geopolitics in a nutshell. So this leads back to also why I believe stablecoins in itself will have a huge impact in the world. No doubt at all. And it will happen so much behind the scene that we can not even imagine towards it. However, I think all depending on what we are discussing now of the connection to the issuer, what is behind, because right now we don't fully know exactly what is behind Tether. But one of their strengths in terms of having trust in the crypto market is that they have said, yeah, we have not said a stablecoin functions like in theory. I give $1 to you, you issue a stablecoin to me, and you put the dollar in the bank, so I know that I have $1 as backing if I want to cash it back.
But liquidity, I mean, yeah.
Exactly.
Like we have a gold for the money, so...
Exactly. So, but in practice, it's rather that, you see, you don't, how these companies, and, Tether, they made more than 13 billion US dollars in net revenue last year. So it means they generate some money. They generate it because also they buy government bonds. So I heard Tether in itself, according to rumors, they have more US government bonds than Germany. It puts them into a pretty strong position. And they also have then, like Circle, they buy US government bonds because they get an interest on it, so they earn some percentages on every dollar you come in with. They're more or less a bank. However, Tether, they have also said, we do not only put it into, the core traditional financial asset classes that can generate 2, 3, 4, 5, 6%. They said, we have also bought Bitcoin because over time we believe this will increase in value. It's hyper volatile, but over time they have had right so far. And this puts it into the into the perspective why the crypto community actually trust Tether, even though they have never let themselves be audited. And that's why some people say, regardless of we are talking now that the Bitcoin is on 70,000 something and not 110, they're still over collateralized based upon their investment in it. And that's where I see the strength in itself of Bitcoin going forward. Not a direct payment method, but as a collateral, as something that you can put into a transaction to prove that you actually have a value of something, and it's also liquid all over the world, and it's apolitical. And that's why I believe Bitcoin will have a strong function in this ecosystem. And if you raise this one out to the banks and TradFi, now they will say, what are you saying there? What do you mean? We're not touching Bitcoin. We have our own stablecoins. Stablecoins is something totally different because there's a US thing in the back end side. There's a US dollars, it's in the bank. We know what it is. There's Bitcoin thing. There's nothing behind it. But still, the stablecoin is not apolitical. It's either US based, or why don't you just use, it's not a token in itself directly, but the EU one. The government money from China. It's been out there for years. It's functioning. Millions, trillions transactions, and millions are using it. Why don't you use it? Because it's politics. And that's my point down to that. I think we need to see this ecosystem in a totally different perspective. If you raise these kind of levels right now, if I come into just an average financial institution and they have no experience and say, stablecoins will be handled back inside and Bitcoin will be important in the future, they will say, who's this guy? Yeah, come back in 10 years maybe. But these things are happening as speaking today. And that's the I would say the important thing that I think people need to separate between. And that's to, if I even go to a journalist and say these things, the journalist would be, he's a weirdo, sort of saying, he's the crypto guy or whatever. Does make sense. What the journalist is looking for and the average Joe is looking for is that you and me can go in here in the cafeteria or into 7-Eleven and say, oh, I paid with my Bitcoin and bought a Coca-Cola. That's not the use case. It's totally opposite way. And the ironic part, maybe for, call it the crypto industry, is that what we're trying to get rid of, if you say we in terms of the crypto industry, is trying to, the whole momentum that has built up since, say, 2008-9, is to get rid of intermediary third parties. However, in order to scale it, like I say now, we actually need third parties there who can provide the trust, the ecosystem, the easy access, a better UX, all of the things that the average Joe needs. And all of these things are now going to happen on the back room, on the back end side, that the journalist doesn't say, the people on the street doesn't say, your grandma doesn't see it, and the taxi driver doesn't see it, but it's being built right now. So that's the interesting part of the whole craziness, that if you first touch a little up on this part, you really also need to understand on the other side the importance and the value of what the Bitcoin in itself has brought with you. You can like it, you can hate it, you can be totally indifferent towards it, but it's come to stay. It is here. It has a certain value, regardless of it's 110 or 70 or whatever. And this is what you have to understand in the total complexity when people normally throws in, oh, is this just a meme coin? Oh, this is a stable coin. Oh, this is this or that. And all of these things are connected together. And that's how you need to then understand all of them together as the bank or the TradFi. Because one thing is to handle clients who come in and say, you come to the bank and say, hey, I've dealt with crypto assets. Can I become a customer? But also, other side, offer bank accounts or offer product services. And if you are to offer product services, you can either say, hey, let's just do safe storage, because the stupid consumer out there, they have no clue. And I mean also, I don't mean it in a harsh way, but I mean it in the way that it's also stupid investors, stupid crypto investors, but it's also smart crypto investors. And there's also smart people on the street who has fear because they know, they have seen, can I have my stuff just privately on a ledger? Yeah, you can. But there are mess ups there also. There are computer errors, they're high risk, you don't have insurance. And in this kind of way, there's a room and an element for someone like a bank to have a third party like, say, Fireblocks or Taurus or others who is there, who deliver these kind of services, risk-free, third party in some matter. It's not the bank itself. They just take a percentage, And the crypto investors, I know lots of crypto investors, even here in Norway, they say, yeah, I know I can store it on a ledger, but I don't feel safe and secure towards it. I want someone else who has the insurance. It's fireproof, it's waterproof, it's someone I can lean towards. I'd rather pay, 1,000 Norwegian crowns or $1,000 per
Like
month.
to have insurance, some type of.
Exactly.
But say what happened with the Bybit. Nobody can be insured with this. There was the biggest money that just go away from the cryptocurrency exchange.
Yeah, of course, you have the example of Bybit now, of their hack. However, if this had happened in the ordinary banking world, I discussed this one just recently now in Stockholm as well with banks and TradFi. And then we would have seen a case, most likely we'd have had investigations going on for 3, 4, 5, 6 years, and it would be a messy stuff.
Exactly.
What happened there? Within then less than a day, they had ensured the sufficient lending to lend back the ETH that was hacked, the different types of ETH that was hacked. And they also had sufficient funds and backing on it because they actually earned money. So they had, call it liquidity, to back it up. Otherwise, no one would have lended them or sold them. So they have cleaned more or less everything up now in terms of that no one has carried any losses. Of course, you could have the opposite side, that if they weren't liquid in general, they were, call it, in a startup period, they would have had a huge problem, of course. But
they
still...
got bankrupt, we would say, yeah. But in that way, they just lose their own money.
Exactly. So the case is rather here that, in this case, Bybit is also regulated by VARA, actually, in Dubai. And they have, certain frameworks that needs to be put into place, naturally. But I would say you should understand, call it, your risk, regardless of what your investments are. Because if you have money in Norway, ordinary in the bank or whatever, you're only insured up until 2 million Norwegian crowns.
And after?
And after, you have no claims right. And this fund, the banking insurance fund, it is only if 1 or 2 of them goes bankrupt. If all of them would have gone bankrupt, you don't even have close to 2 million. So you need to then understand and diversify your risk based upon whatever basic criteria is. You should never store, call it, maybe all of your assets if you have a high value in just one bank, or one bank is safe, or one vault or whatever.
Same stuff with the cryptocurrency exchange, same with the exchange.
Exactly. So it's all about risk diversification. So I wouldn't say that Bybit is, call it, one example of that. Everything goes to hell if it happens on this side or that side of the industry. It's more or less that the hack that they experienced, it was not about, call it, their pure infrastructure in general. It was rather that there was some smartasses who actually understood the process, the human error elements, that it's not one-to-one related, but this could also, call it, happen within the TradFi world if they wanted to do such an approach. On the other side, it's easier to move, call it, the crypto straight out than rather the fiat transaction thing there in terms of moving it out. But what we see in practice now, we already seen the first case, I think, $40 million. That's peanut compared to the whole value, but still, it's not insignificant. That has been managed to be sent back. And the fine thing is that crypto is 100% traceable. So naturally, they sent lots of stuff to mixers, tumblers, whatnot, and swapped it instantly, but still, it's traceable. So you should be pretty good in this landscape if you are able to, spend this one. So I even saw that apparently it was some of the contracts where they had burned significant amounts of value of this one also, because they see, well, we actually cannot spend it, we cannot take it further here, we are fucked, sort of saying, to say it straight out, we cannot move further. So that's also part of the whole thing that needs to be lifted up, I think, if you are to lift it to the Bybit hack in itself. Is this a horrible crypto thing? It could only happen in crypto. This is the example. Crypto stinks and it sucks. No, there's
big titles on the newspaper.
Exactly, but you need to look behind the scenes and really understand how the setup, the architecture, and everything works. But again, if you had all your fundings in Bybit, yeah, it could be the same thing as during the financial crisis. You could have all your money in one bank and you could lose everything out of it. So it's not crypto specific, even though it's the clear example that is very easy for a journalist to pinpoint and pick out and choose to say, hey, crypto in general, look at it, it's billions going away, it's high risk. But risk is all over, so it's not crypto only. That's why you need to understand the different segments connected together, and that's why I've had an interest in understanding, call it more than just one industry, to try to connect the dots to see how do you build a market going forward, how do different technologies work within a sphere, within not working also, how to not use this technology. In many cases, I've advised also do not use blockchain or crypto or whatever, use rather these ones. So normally I say it's the combination of what people think I'm crazy for. Like I created, the government metaverse office for the tax authorities and the business register office in Norway many years ago. And people still think I'm crazy. And people hate me for spending taxpayers' money on this bullshit nonsense thing. I said, yeah, but still they learned a lot from it. They learned something about something called DAOs. And they were like, what? You can go to journalists and ask, but DAOs, what is it? Decentralized Autonomous Organization. No one knows it. But DAOs is not something that is coming tomorrow. But still, it's being dealt with today in projects. And there's tax implications there. There's legal implications. That's something that Norwegian government learned from. But still, when I say metaverse, people are just, metaverse, that's dead, Magnus. What am I talking about? This nonsense? Oh, come on. I say, yeah, but if what I mean about metaverse is the combination of three tech pillars: XR, extended reality, AI, artificial intelligence, and blockchain as the last one. And if you take all of these together, you have a bunch of subcategories under all of them. And I think we are pretty sure that XR, in terms of how we see and visualize things, it will not disappear. Apple is just one example of someone who puts this one mainstream. AI, will that disappear? I don't think so. Blockchain, will it disappear? Some people claim it. We can argue quantum and whatnot, but leave that aside. It will not disappear for guaranteed.
It will not. It will. Yeah, exactly. It will not disappear, but it will go up, or maybe it will develop in somewhere. But it will be everything. Yeah, it will become bigger.
Yeah, or combined. So that's my point. If you look into then and call metaverse as XR, AI, and blockchain, and see how you should combine them or not combine them, then you have the answer to all business use cases for regardless of you're a bank TradFi, if you are a clothing company, if you're a food producer, if you're an oil gas company, or whatever you are, or on government side for that matter of sake. And that's how you need to see it and clearly understand, as said, when to use blockchain and not, when to use AI and not, when to use XR and not, and how you should or should not combine these things. That's the essence of the whole thing, and that's where you have the stable coins, that's where you have the crypto part, that's where you have the verification mechanisms, that's where and why you have, in cases like I mentioned lots of times, Norway, business entity register, looking into the shareholder register with the Brøk solution, public Ethereum solution, so they can scale it easier. Public blockchains is the only thing that will scale if you're talking about blockchain. Now, I think banks also understand if they are to scale, they cannot just do the typical R3 Corda consortium on someone who wants the banking coin to be close there. No, it's public railways. It's much easier if you believe you can use. You say you have a challenge if you want to use Tether as a stablecoin. You have a challenge because someone will say, "Oh, is it legal or not now?" Right? That's a challenge. But then Circle understands this one and say, yeah, that's why we have been smooching up with, EU authorities to, provide legally compliant so you can use them. But if they are using, USDC, a Circle stablecoin, that means that you don't need to have your own railway among the banks. You can just connect to the blockchain. It's free, more or less. And you can do it within less than 3 hours if you have the necessary competence internal, and all banks has this one. We saw this one during the pilots that the Norwegian Central Bank has carried out. We have tested this one in phase 4 in Norway already. It's out there, it's working, all of them connected to this decentralized railway structure within 3 hours. And that's the interesting part that I see here, that when you sort of get the elements of what everyone else out there refers to as just, DeFi or whatever, the mechanisms, it's just criminals and anarchists and crooks and bandits and whatever. But no, they are actually building. Of course, some are with that intention of having quick money and run away or whatever. Of course, like all industry.
Yeah, same like the military, you start to use the internet and then the bandits start with that cryptocurrency.
Exactly. So it's down to that. I think that we need to wake up and understand that the world doesn't move forward in one way or direction towards that blockchain will take over for the fiat industry or crypto will take over. It will be the combination that we will use the benefits, that we are safe and secure enough, that we feel safe and secure enough, that is legal and tax compliant and etc. Like I mentioned, the example of SAP is just a start, but then it approves something. You have the trust, you have the brand name. That's what you need. You cannot just go and say, hey, handle the bank and here I have a ledger and a wallet and just connect it and do the transfer. No, it will never be allowed inside the system. So we have to grow it in using parts of it, using the mechanisms, using the element, and also understanding what newer generation will require. So we will never see, like I always say, you will never see change coming in the 1 to 3 year perspective. Nothing happens in the 1 to 3 year perspective, but in the 3 to 5, you can identify some things also based upon new legal requirements. Think about digital product passporting or digital ID. All of these things are legal requirements that comes up and needs to be connected. The perfect match and link towards this one is to prove something by the blockchain, but you also have to have other oracles that proves things in there. You have to combine the different technologies, and then you have to look at it in a 5 to 10 year perspective and maybe longer. There you can also make predictions based upon new legal requirements and other stuff that comes. But the important thing is rather, who are your customers going to be in 5 to 10 years and 10 to 15 and 20? And that's where you need to prepare for the change. And most people, they're locked up in the 1 to 3 year perspective because they said, this is where we bring in the money, Magnus. This is hard stuff now. The world is, at the risk level right now. We don't know what the Saudi negotiations will lead to. We need to focus here where we bring in the bread, milk, and butter. But still, you need to understand what's happening on the back end side and how to prepare, as said, in the 3 to 5 and the 5 to 10 and see the change, because change will come. The role has changed always, and it will happen again. So history repeats itself a little, and that's why I also say to the crypto industry, you can hate it, you can like it, or be indifferent, but the TradFi actors said they will play a key significant role in terms of driving the whole adoption for the whole of the industry further. And this is not going to happen visually in the first 1 to 3 years, but the 3 to 5, I predict that we will see lots of changes coming up.
How is crypto taxation structured in Norway, and what the rules do people most often ignore?
Crypto in Norway is taxed in the same way as in many other jurisdictions. We have both a so-called wealth tax and also a capital gains tax. It means that if you hold your cryptos, if you just go and buy crypto on NBX, K33, FIDI, whatnot, or Coinbase or Kraken or any foreign, then there's no tax implication per se in terms of that you buy it. You go in with Norwegian crowns to euros or directly over from Norwegian crowns and get the crypto. You sit still with it, you do nothing else, then there's no tax implication there and then. However, if you sit still and have it over the new year, i.e. the tax year of the 31st of December, or actually one of the errors that lots of people do when it comes to taxation is that for some reason in Norway, you're not supposed to set the value of your cryptos on the 31st of December, but on the 1st of January, the following year. No one can explain or justify that rule, not even within the crypto task force group of the tax authorities. There's just one guy or a person within the Minister of Finance who has thought of that this is a great idea. But anyway, you then have to put the value of the things you owned, the crypto you owned, by the 31st of December, but you have to set the value of the value it had by mid-course day, the 1st of January, the day after. And you can also use now the tax authorities in Norway. They're really good on this area. So they have come up with a fixed list of the top 10 cryptos, I believe, at least, where they have put in the exchange rates and everything. So it means then you pay a wealth tax on it. It's part of it, like you own a stock or a share or a boat or a car or a house or whatever. It's put in as your wealth. If you have traded anything within this tax year, then it's down to what you have of a so-called input value and an output value. The input value is what you paid for it directly, minus the costs of transactions that you have had. That's the value that you will be measured towards. What is your output value? That is the output value of the price is either higher or lower, plus the transaction fees. So then you deduct the output value towards the input value, and then you find out, have I had a gain or a loss? A loss can be deductible. A gain should be paid and taxed for. So it means if you bought crypto and say that crypto was worth 100 when you bought it, and when you sell it within the same year, then it was worth 1,000. Then you're supposed to pay capital gains tax, and in Norway that tax is currently on 22%. So then you're supposed to pay taxes on 22% of the gain you had from 1,000 to 100, say, including everything then. 1,000 minus 100 is 900. 22% of 900 is the tax you pay.
Let's say, as an example, 1,000. It was cost one Bitcoin or anything. It cost me $1,000, and then it became $2,000 in the next year. So I pay for $1,000 22% from this.
Yep.
So, but if it became $500 and I have a loss for 500, so it would be deductible, or it means that the government will pay me 22% from the 500.
No, you get it into as you had a loss on the stock, on the shares, etc. So it's in the same principle as it was.
So you'll not pay you just don't pay the 22% from the loss. I mean, you are not paying anything from the loss. So it means if you bought was $1,000 and it became $500, so you just don't pay anything. You just register loss.
Yeah, you have to register. And the point that lots of people are also losing out on is that you have to have actually you have to have sold the token in some kind of way. You have to get rid of the token. Lots of people are saying, "Oh, it has zero value."
If you have a spot, on the Coinbase, for example.
Yes, but the thing is, if you lots of people, I've seen so many on the tax returns, and one of the most common errors that they do is that they just say, "Well, this token has zero value, so I reported a loss on it to get a deduction." And the point is rather, you have to then liquidate the token. I mean, you cannot sit and own the token itself and says, it's listed as zero value or just some cents, but it has zero value. It's the same way you can sit, then you have the stock and the share, sort of saying, and it at some point of time, if Elon Musk or someone else comes in and say, hey, we're going to use this one, suddenly has a value, then it has a value. Then
Trump coins, some like meme coins.
It's something like it.
Because you can buy, in some exchange, you can also buy Trump coin as well. It's meme coin. And then you
NBX is listed.
Yeah, same.
So one of the common errors that I see is that people don't understand you have to not have access to the coin and token. And a common error is also that people actually don't understand the capital gains tax thing. They think that it's only when they take it out the fiat. So they think I can go and buy ETH. Sit still for a couple of days, ETH can go up. Then you buy, say, Dogecoin, to take just far-fetched example. Then from Doge, you go maybe into, say, you sit still for some days or weeks or whatever and hold a stable coin. So we go to Tether. Then on Tether, you prefer to go in and say, oh, I'll go into the DAI or Sky ecosystem, as they call now, or make a DAO. You buy ETH again. You put it into the smart contract, lock it up as collateral, you receive DAI back, you start trading this one, you trade it into an algo, you have lots of other tradings, then you go back again, pay the loan back to the MiCA algorithm, you get to ETH back, you have a gain on this one as well of crypto gain, sort of saying you have lots more ETH when you came back. ETH has also increased in value, but still you gather all together in ETH. You then send it into a stablecoin again and send the stablecoin to, say, K33. And exchange it into Norwegian crowns. And then lots of people are thinking, oh, I'm now just looking into the price, what I bought the first ETH for, and what is the value when I get out. But on all these steps that I described, you are supposed to pay 22% capital gains tax on going from ETH to Dogecoin in the first step. That's a small gain if it was a gain there.
But for example, if you have not been paying for like 2-3 years, and then you decided to, because it was like many years ago, it was not like so legislated, and then you decided to pay it after a year, like after next year for the whole period.
And that's the cleanup process, and that's messy processes that I've been involved in. I can assure you that.
But there are a lot of people in the field that are struggling with this, how to regulate this.
Lots of and governments are struggling as well. I would rather also like to say that, Norwegian tax authorities, they are, if not the best in the world on this area. Not many people knows it. They even gone publicly out and have been having them on my seminars and webinars and everything for many, many years. But Norway started already back in 2012 to look into Bitcoin. And that's down to that it was actually 2 IT consultancies that is not tax case handlers, but just working in the IT department there up in the northern part of Norway. They said, hey guys, just on the same interest that I had when I was with EY, tech is moving. This Bitcoin thing, have a look into this one. They're like, the case handler's like, what do you mean? No, it's this new virtual digital money, funny internet money. They're like, okay, yeah, okay. IT guys are strange. And I said, guys, if this grows, this is 2012, remember, it's pretty early. Bitcoin had some, $100 thing, and it's like, wow, now it's falling apart.
Some people even didn't hear about
exactly,
Bitcoin.
But still, in general, no one used it. And they said, it will have a tax impact, doesn't it, if this grow? And the case, and I was sure if it has a value, of course it has a tax implication. So that's why Norway, to my knowledge, and I've been working with governments pretty much all over the world. I never heard anyone else who has been in this early. Norway then sent 2 guys to a Bitcoin convention where they had to pay the ticket by paying by Bitcoins in 2012. So Norway, I believe, was the first country in the world, actually, from the government perspective, not officially, but indirectly, who acquired Bitcoin to use in a government setting to pay their tickets. I'm not sure how the travel expense bill was handled by these guys, but in some kind of way, they paid this one out of their own pocket and paid in Bitcoins, and still it was in the government setting and the purpose. So the point here is rather, they've been looking at this one from the tracing point of view, the clustering point of view. They built up a great team, and lots of people are telling me, Magnus, it's a nightmare with this tax thing because, if I call up a random case handler, they have no clue about my shitcoin, my meme coin, my whatever. They don't know nothing.
And if, for example, I can register it in the not Coinbase, but there are some other exchange that are not connected to Norway, how can they trace me?
Exactly. And the case there is rather, if you then call up a random case handler at the tax authorities and say, I have traded derivative products within the ordinary fiat world. Can you help me with this? You cannot expect a random case handler to have knowledge about either that fiat area or your shitcoin area. You have to know who to talk to. So I would say I give great cred to what actually Norwegian tax authorities has built up on over the years. It was mainly driven by a guy called Torstein Tind, who started and formally established the Crypto Task Force Group in August 2018. Then Marius Johansen has taken over this role, and he has also done a great job together with the rest of the team. And lots of people don't have this impression, but you need to be able to ask and talk to the guys who has the competence, because Norway actually has a very good and high competence on this area.
But for example, to others. But if you want to know about the tax, if you call to the hotline, can they also help with that question?
In general, no. In the same way I said, if you have a complex, financial problem, you need to talk to the experts. And it's not like they have 500 experts. They have a handful of of persons who really knows hands on this stuff. But you need to get into that group and ask specifically, I want to talk to the Crypto Task Force Group. That's when they can help you. So in Norway, we are actually very lucky to have such a great team from the authorities who is there to help, to have a dialogue, to, not just close the doors like many other jurisdictions. They say, send in your application or send in your complaint, and we will look into it and we will come back in 1 year. But in the meantime, pay your taxes and pay the fees and everything. That's a classic thing. In Norway, I've never waited more than, and it's not only about me, but in general in industry, waited more than 1 day to have a meeting with them. We can predict, we have clarity. And they also have a much more pragmatic point of view towards things, that they see things move. They also, you need to understand, Norway, we have to also follow international tax rules. It's not about, call it, people are saying, oh, this asshole doesn't understand. It's so unfair that I pay crypto and taxes and whatever. Well, it's the whole of the system. It's not like we can just choose it. We have to follow specific rules. So that's also why I would rather say, think about things here and try to wear a case handler's hat and see it from that point of view. And what I see, back to your question about what people normally do not understand and make errors on, is that if you receive, first of all, if you are to declare, people in general think, oh, I've not made that much of a value or a gain on it, so I'll just leave that one out. It's not that important. And in the same way, if they receive a control of their accounts and you have to reopen the books back in time like you described, and that's no fun. I've reopened books back 7, 8, 9 years. That's no fun. And then you have to declare absolutely everything. And I mean absolutely every wallet, not only the main part or whatever, absolutely whatever shitcoin wallet you've been trading. And that's what people are forgetting. So I say always, as a friendly advice, keep track on everything you do. Use can be a Word document, Excel document, keep it whatever, but keep it for your own purpose. Always say, hey, in this case, this date, I went into this ICO.
To make it simple, you just made an Excel and you just open on which price you bought, where you bought it, and then you just...
Because what people tend to forget is that you move fast. Crypto moves fast, and you tend to forget about the things of saying, hey, I went in, I did this, whatever. But if I ask you, what did you trade 3 years ago, 4 years ago, 5 years ago, 6 years ago? These are the questions that authority ask. And then you say, oh, yeah, I think I remember. I'll try to look into it. Oh, by the way, this was back to the time of Mt. Gox or whatever, a crypto exchange that had hacked many years ago. And you don't have access to the data. And this is not only about Mt. Gox many years ago. It's happening today. Suddenly you don't have access to this shitty project that failed, that was a scam or whatever, or failed for some other reasons. So then you just try to say to the authority, well, my proof is in there. How could I? Well, you, as the taxpayer, have the proof of burden. That's what you tend to forget. If you would have had a document, very easy, just one sentence, bought into this one, print screen or whatever you did, paste it into Excel, then you would be able to prove it. It's these small things. It takes you 2 seconds to do it when you're in there. And this is what people just don't bother to do, because they think, oh, it's traceable, it's on the blockchain, I can prove it. But lots of transactions are not de facto all carried out on the blockchain per se, and it's not downloadable in itself. So that's the main part that I see. You're not able to actually prove your story, and that you do a mess of just saying, I have a wallet. This might be mine wallet, but I also is operating on behalf of others. I buy a little for you, I send to you, I send it to my grandma or my mother or some friend that I just met on Telegram or Signal, Discord or whatever. And then you receive the questions. Okay, we see lots of transactions. We see your trades here. That's for tax purpose. But then suddenly you send to this wallet. What's this transaction? Oh, it's just a friend. Who is it? I don't know. Community friend. Never met him. Okay, here's the pseudonymous ticker to it. Okay. Is this money laundering? Is this going to gambling? Is it going to prostitution? Is this going to terrorist financing? Can you prove it? No, it's just a friend. Oh, a friend, you say. Is this, Osama bin Laden, your friend, or who is it? These are the real questions you will receive from authorities. Thereby, if you had been smart enough and spent 1 second to take print screen from the chat, saying this is your friend, sort of saying, copy it into the Excel sheet. And that Excel sheet could be long, but it would save you some time if you had it in a chronological order. Then you could be able to prove it, because that chat is long gone. Signal is gone in, some people disappear in 24 or within an hour. So these kind of things, document everything you do, and do not only trust that you can download whatever ledger it is and put it into CryptoSecond or some other great tool to, do the taxes. So some of the other, call it to say it straight out, fuck-ups that I see out there is that also people tend to say, oh, shit. Yeah, I've done lots of trading. I'm in DeFi also, Magnus. Of course, how else do you think I make my money? It's not about sitting buy, hold, sell mechanisms of Bitcoin, of course. That's way passé. It's not into my main holdings Bitcoin. Yeah, but to earn the money, of course, I need to do trading. Of course. So then they are thinking, okay, here I cannot do this manually. I have had clients who had millions of transactions. And you cannot do this reconciliation manually.
Yeah, exactly.
That's
How
impossible.
you can handle this? How you can
Rule of thumb that also tax authorities say, and I say it, is that if you are a trader within crypto, you can spend 9 months on doing trading, and then you have to spend 3 months full time on doing tax return handling. That's the real benchmark. I'm not kidding. It's a real benchmark. 3 months full time, and that's when people.
If you will not do this.
No, then you're screwed. So in this process, normally what's happened, people try to sit down and they say, okay, I can do this. They start and look into it and remember fairly good, what is this? Try to put a fair value in some shitty NFT you got. You have also lots of airdrops. People just sending shit to you. Yeah. Can have a value, can have zero value. And you try to do your best. And then they say, oh, I need to use a tool. Okay, can I use CryptoSecond? Many cases in Norway. CryptoSecond is a great tool. But in other cases, if you have advanced DeFi, they cannot help you. So then you try to look to Coinly or other international ones. And then they're like, okay, oh, here's another one. Here's another one. Many of these ones are US-based. US have totally different tax rules compared to Norway. There's other places in the world where these tools are set up for mainly one jurisdiction towards other. Then you can just choose the checkboxes to know principles of something called first in, first out, or first in, last out of stock share principles of whether or not which is the token or the share that you sell is the first one or the last one, etc. And there you fool yourself because you just upload all the data, the CSV file, you press these buttons, and it's like, oh, hey, so the other tool says I was liable to pay 2 million in taxes, and this one says I'm going to get a deduction of 500,000. I'll choose this one. But it's based upon the wrong principles. So people fool themselves. So they try to use different tools, 2, 3, 4, 5 tools. Then they come back to me and say, Magnus, I'll pay you anything. Just help me. I spent 3 months now. I cannot take it anymore. Please fix it. That's the mess ups that we see. So if you had then a strategic point towards documenting everything you have done, so it would be easier for me also to go in to clean up and save your ass, to say, okay, I see chronologically what you've done. Oh, you received this one. You set this airdrop to 0, but you still have the token, don't you? Yeah, but the token doesn't have 0 value. It has some kind of value. We need to report it. Oh, I wasn't aware because someone sent it to me. I thought it was for free. Do I need to report free things? I just got a giveaway at a conference. Why do I have to pay taxes on this one? Because it's another different type of asset class. It's not referable. And that's what people try to link it into the ordinary world and also partially say, it's unfair. I feel it's unfair. So leave these things aside. Think about it, that if you have had a gain, there's always a tax on it. That's the main rule.
So the main rule is just to register and document everything what you have, even in a note or Excel. So my last question will be into this topic. How actively does the Norwegian tax authority track crypto transactions, and what tools do they use for this, if they use?
Yeah, no, I cannot naturally. I've been working for I'm part of the metaverse expert group for Interpol. I work for the counterterrorism group Crypto for the United Nations. I'm a crypto expert at OSCE, the Organization for Security Cooperation in Europe. So yes, I've been dealing with them. I was assisting also the Crypto Task Force group in Norway on establishing the day at the Gardermoen in 2018, etc. So yes, I know lots of things here from the inside, also from assisting different variation of criminal and secret police all over the world. So I cannot call it all the insider things, but what is publicly known is, of course, governments in general, they use clustering tools, so-called tracing tools, like Chainalysis. You have Elliptic, you have CipherTrace, you have TRM, you have lots of crystals, you have Global Ledger, you have lots of these tools that you can do to monitor their transactions. And lots of these tools, they are more or less called a little potato in terms of what they do. It's differentiations towards specific parts. Are you a government doing investigations? What are you? What level are you? Crypto exchange? Do you do it proactively or do you want to do it for investigation purposes? Also the UX part. Long story short is that Norwegian authorities back in the days when they started out in 2012, they didn't manage to cluster and trace it, but they have been forward-leaning enough, so they have had public cases out there where they have had summer interns from some of the smartest students at school of NTNU towards universities in Oslo, to Bergen, to Tromsø, to whatnot, where they've hired in them and said, hey, this summer, spend 3 months, try to fix the clustering. So Norway has actually tried to build their own clustering tools to see it. Horrible UX on it, but it works good on the back-end side. So what people are underestimating is that governments in general, they can and are de facto monitoring this one. Not in, call it, the live monitoring way that they say, oh, here's a transaction, there's a transaction, oh, we got you. But this is about data. When I am sending something from my phone or the computer, this device is using an IP address. It also has a MAC address. So it's also down to where is the Wi-Fi connected, where is the telecom operator connected, and the device in itself has also an ID. All of these things together makes it traceable for National Security Administration to go to the ISP provider, internet service providers, to get data out. Where we know that this wallet is connected to this device. We have no bloody clue who owns the device. Who is it registered in? Of course, it's possible to set up a fake ID and whatever and get a connection or whatever.
Yeah, something like fake ID, or maybe they're using the type of a Tor thing or something.
Of course, we can set up whatever VPN solution or whatnot. But in the end, we have data borders at all jurisdictions.
And everything is registered on the clusters. Maybe.
Exactly. So National Security Administration have data borders. All data that comes in and goes out of Norway in the same way as in UK and Poland, whatever, you monitor it in some kind of way. It's national security intelligence. You need to protect it. And in this kind of way, if you have a case where you have an investigation where you think it's something of significance of criminal activity or whatever included in it, then it's perfectly possible to merge the data from what you have of the public blockchain identification of your wallet that you can run through a mixer or whatever. You can use the VPN solution, but it's linked towards a Norwegian device in the end. There you can find out at least that, okay, this smartass has a stolen phone using the Wi-Fi of your neighbor or maybe McDonald's or whatever. Then you need to try to find a physical tracer and do a physical investigation to find out where is this device located. Maybe we can find out who this person is. So it's not a one-to-one, but I'm just telling you from the high-level perspective that governments in general, and this is not only Norwegians, they have a way better trace on this one compared to what people are thinking. I'm pseudo-anonymous, or people think in general I'm anonymous. So it's not on a one-to-one matter, but take the example, to finish this one off, Norway. They were the first authorities in the world to showcase a heat map of all of Norway, where at that time I talked to Torstein Tind, who was then the head of the Crypto Task Force group, and I said, use a bold state line. And so what do you mean? Use the heading, we know where you live, ... And that's what they actually put into their official slide. We know where you live, ...
Yeah.
And just a heat map of Norway of the areas where people live where they have crypto. And I said, use this one out publicly at a startup, at the meetup or event, whatever. And you can just pinpoint the one in the audience that will say, shit, they know my home. There's my address. And all governments, I would say, have this type of data, but they have not been that forward-leading as Norway to release this one out publicly. So I would say you would be stupid if you think you can do crypto transactions today without people not knowing about it, because there's so many data links in that you will not be revealed at the moment, but at a certain point of time, we have better data capacity that goes back in time also. And again, there's no fun going back 5 years, 10 years, or 15 years trying to explain what you have done all the way if you try to hide away. So I would say using crypto for criminal activity is the most stupid thing you can ever do, because you leave so clear traces that you cannot argue yourself away that this was not my cash or not my wallet. So that's why we still see today, cash is de facto the preferred way to do money laundering in itself.
So thank you very much, Magnus. It was very nice to talk to you. We have a lot of topics to talk more, but let's see, maybe we'll have another podcast. Was very interesting and hot topics that we've been talking, and it's actually very interesting and actual for the businesses, for the startups, and especially for the people who wants to buy and sell cryptos here in Norway. Thank you very much, and probably see you on our next podcast. Thank you.
Thank you for having me.